Hey, hello everybody. Hi, my name is Darius Anucauskas and I'm the global market analyst here at Markets.com. Look, this is a quick video preview for the webinar, which is going to happen in a few seconds, so do not tune out. So yes, we're starting in a bit. We're going to pick up on a few economic data sets which are happening today. We have the ADPs, we have the ISM services PMI. So yes, and in general, what's happening in the world right now, because it's a little bit of a mess, I think. So hey, hopefully you'll enjoy the session, stick around, and I'll see you in a bit. All right, okay, ladies and gentlemen, hello, and good morning. So, look, I want to welcome you. I want to welcome you to this Markets.com show. Look, we're going to talk markets. We're going to pick up on events, what's happening right now. We had a bit of a test run on Monday, so unfortunately it didn't really go well. However, look, we've fixed all the issues, and hopefully now you can hear me and see me well. So, ladies and gentlemen, whoever's tuning in right now, please, could you let me know in the chat if you can hear me and see me well, because that's going to be very, very important. Oh, I can see the first one tuning in here, Christiana. Hey, Christiana. Hi, how are you? I hope you're having a wonderful start of the day. I hope you can hear me and see me well. Just if you can drop me a message in there, if you know, just to confirm. And if everything's running smoothly. So yes, if you, like I said, the stream is running well. Look, what can I say? It's a busy day. It's a busy week in general. We are in the NFP, in the job number week. Oh, hey, Christiana. Hey, thank you very much. You can hear me well. Fantastic. That's what I would. That's what I like to hear. Now, I'm just gonna arrange my camera just a little bit to capture everything. The most important in this video, of course, is the plant behind me. So hey, but look. Yes, we have a busy week. We have a busy day today as well. And before we start jumping into all that, let me have a quick read through our risk disclaimers. So yes, the content we produce does not constitute investment advice or investment recommendations and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest. I'm not going to disappear anywhere. I'm just going to mute myself for a little bit, and then we can continue. All right. Okay. So so yeah, I hope everybody read the risk disclaimer. So yes. Also, just before we kind of jump in into the charts, I just wanted to quickly share with you our website, the Markets.com website, which you can always check for more information about us. If you have any questions, you can always message us, reach out to us. We'll be more than happy to assist. And you can find a lot of good information here. But yeah, feel free to explore. Now, ladies and gentlemen, let's jump into the charts. So the first one I want to pick up here is Nikkei 225. As always, I start off with this one. And I just want to see what's happening in Asia first, and then we'll jump into other indices. So look, we are having a bit of a turbulent period right now because, again, as we know, we are in this the whole tariff war situation, and yes, at the moment, I think that that will be the topic number one. It seems like other economic data is getting, overshadowed by the political situation. I don't know. Maybe this is the thing that we are gonna go through right now at this point. But I strongly recommend everybody not to forget about the economic events. So, talking about the economic events, I mean, we're gonna have some information coming out today, like I said already, from the US, but also from Japan, because we're picking up on Japan right now on Nikkei 225. So Jibun Bank Composite and Services PMI came out today. Look at this, 53 against the expected 52.7, not to mention the previous 50.9. So in a way, I would say it's a good number. So, oh, I can see there, Mr. Žilvinas Tamošauskas. Hey, good morning. Yes, good morning. Labas rytas. Yes, happy to see you here. I hope you're gonna enjoy the session. Look, what I wanted to say, basically, yes, like the 53 that came out here and from the services PMI, the final one for Japan, the against the, you know, like I said, the previous 50.9. That's quite a good result in a way. I wouldn't say, you know, something to be ignored in a way. However, it seems like the market doesn't care right now about these moments, about, like, you know, the services PMI, yeah, we're seeing, like I said, a bit of a decline here. But I think that at the moment, everybody's still digesting the whole tariff situation, and I think that we will continue digesting that as well, going forward until something bigger doesn't happen. For now, looking at this picture, looking at the technical picture on Nikkei 225, we can see that yes, we're seeing some weakness right now. However, this is what I said to you on Monday in the session, which didn't really go well in a way in the beginning. But what I said to you previously, that look, not everything looks that bad yet. So although we're, you know, at this point right now, we're seeing a bit of retracement. And this is exactly the word that we're looking for, retracement. So we remain above the 200-day EMA. This one, as you can see, the one that's shown as the white line, it has been a good area of support. I mean, yes, we overshot it by a few times here in the past. However, still it has been acting as a good area of support. So can it do the same thing? Slightly below that, I have this little short-term upside line taken from the low of the 27th of September. Look, for me to start considering lower levels from the technical perspective, purely I need to see a clearance of that area. If I can get that, wonderful. I will go a little bit lower. I'll go somewhere maybe towards this little area right here. Where's my magnet? Let me just grab this. So somewhere towards this area, the lowest point of September of 2024, around the 35,100 zone-ish, approximately. It's never, I have to kind of say to you, ladies and gentlemen, whoever's watching, whenever I mention a level, it's kind of always the area around that level. So unfortunately, it's not that, you know, simple as we would like. We always aim for a level, however, we actually aim for the area around that. So anyway, that's for something for later on. So yes, right at this point, while we remain in above this 200-day EMA and this upside line, I'm not really getting very pessimistic. However, am I getting very bullish or very optimistic? Not really as well, because I need to see a pop somewhere above this 40,000, kind of 300-ish zone. Because as you can see, it has been acting as a good area of resistance. Let me just grab a rectangle here to highlight this. So this is what I'm talking about. So this is the area. And yeah, if we can clear that area and we can stay and if we can see the body of the daily candle staying above that, wonderful. I will go a little bit, at least I'll get a little bit more comfortable with aiming for the upside. China 50, let's have a look at what's happening here. Looking not very good, in a way, you should say, we could say. But the thing is that, again, the same story, it's not that, you know, tragic yet. I mean, it's yes, we're having this moment right now. We don't know what's going to happen, you know, further. You know, how tariffs are going to impact all that. So we're still looking for some data. We're just in the beginning of all this. So you can expect a roller coaster ride for sure. So let me just double check very quickly if we got anything from China. Oh, by the way, while I'm here on this page, you can always check out our TradingView page here. We do update this on a regular basis, and basically, yes, we for separate pieces of analysis, and I think you can find those useful. Coming back to the economic calendar, let me just double check. Tizen Composite and Services PMI looking good. Okay, looking good in a way-ish. Actually, not really looking good. It dropped a little bit, going from 52.2 to 51. Look, Yes, it's a drop. Yes, it's a decline. Would I say that it's a tragic something really that we should worry about? No, I don't think so, because we're still in expansion territory. We're still above 50, and I think that we need more data to, we could not just base it on this. Oh my God, let's panic and stuff like that. No, we need to wait for for this one at least to fall into contraction territory below 50, and then we could go from there. So. Long story short, China ties in composite and services PMI on the lower side. Yes, not very good. However, I don't think that this is the indicator that will kind of lead or decide on what's going to happen next. So for now, what I'm looking at here, I'm looking at this also from the technical perspective. We have declined quite a lot since peaking here back in what was it, October? Yes, beginning of October time, 16,100. So we declined a lot, to be honest. So if we just measure very quickly how much we dropped, around 20%. Look, normally would people say that, oh my God, we dropped 20%, that's like a crisis and stuff like that. Not in this case. I mean, it depends on, with what magnitude did you go higher initially, because in a very short-term period of time, in a very short period of time. I said short-term period of time. Short period of time, we gained around 45%. So slashing half of it, I think it's it's quite okay. So it's quite doable. So that's why right now I'm not, like I said, I'm not really getting way too pessimistic yet on this one, because again, let's not forget that in any decline, again, depending on, of course, on the circumstances and on the asset traded, there could be some potential. So if it's an index, then I don't really think that this could, totally collapse. At some point, this will have to go higher. The question is, are we going to actually, let me just get rid of this, are we going to clear the 200-day EMA and stay below it? Because so far, again, that has been a good area of support. And are we going to, drop and stay below it and go lower? Or actually, is this the point from where we're going to rebound? Well, so far, we have seen this one rebounding quite nicely. However, am I getting very comfortable? Not yet, because what I would like to see here is maybe like a clearance of this kind of area-ish, approximately around here, the 13,150 zone, because at the same time, we would be placed above all my EMAs here on the daily chart, and then, yeah, we could go from there. So where's that arrow, which I need to draw here very quickly? So yes, something basically like this. So while we remain in here, I'm not touching it. I'm observing the price action. I'm not really, like I said, doing anything with it. But like I said, but it's at the same time, it's very interesting because we're getting in a little bit of a squeeze, or actually maybe not a squeeze, but more of a little range here. So for those who are a range trader, I mean, range traders, congratulations. Maybe this is, your cup of tea. But for me, I like to see breakouts, and I like to see trends. Anyway, long story short, for now, like I said, just observing the price action. Ladies and gentlemen, whoever's watching right now live, please feel free to ask questions. I mean, honestly, this should be an interactive session. I mean, that's the whole goal behind it, so that for you to kind of be able to ask questions. And honestly, we'll pick up on instruments which you want to look at. Maybe you're trading or investing or something like that. And the only thing is, I'll say straight away that if I know something, I'll tell you, that I know something. If I don't know something, I'll tell you straight away that, look, this is not something that I look into, and basically, yeah, I have no opinion on that. Let's jump into the U.S. indices very quickly. U.S. dollar will be later. Dow Jones Industrial Average. Look, I talked about this one in one of my analysis which I did here on Dow Jones, and basically I've mentioned that, look, keep your eyes on this barrier, this 45,075 zone, which ish approximately around here on the cash index. Yep, I said keep your eyes on it, because again, this is a good area of resistance. And another thing is that maybe, just maybe, could be part of the upper side of the range where we're going to be trading in. Again, like I said, this is just an idea, something for you to keep in mind, because in this show, unfortunately, I'm not going to tell you like where to buy or sell. No, this is not my kind of style. What the whole purpose of the show is to basically to give you a little bit different perspective, and maybe to show you something that you haven't seen somewhere else. If you can, from all the instruments that will be analyzed, if you can find something that is, something that maybe you've missed somewhere, that's great. That's my job has been accomplished in that case. So look, for now, I said what I said in this one, that in general, yes, there is still potential for this one to move higher. However, as I said before, I would like to see a confirmation break through the current all-time high first, because then, let me just get rid of this highlighted zone, because this is what I was measuring, how much we've gained so far from the beginning of this year. So around 5% we did already on the Dow, and the only thing is that is this actually going to go higher, or are we going to start ranging? Well, for now, I think that the market is really struggling to find positivity, although not all is that bad. By the way, Alphabet, let me just double check. Yesterday, Google reported on the let me just oh no, let me just remove this. So just let me double check. Yep, Google reported its earnings, and what did we get? We got some revenue, or so earnings were on the better side, and reported revenue is, yes, on the lower side. Okay, look, are we actually getting some action, after pre-market action? Let me just double check this as well very quickly. Yeah, so we're having a bit of a decline. So we dropped actually below the 200 zone. So yeah, interesting. So today, again, depending on how we're going to start the day, but again, we are somewhere around this area. We got closer to the 50-day EMA here on this chart. I mean, on my chart. So this one's shown as the green line. Look, again, when I pick up on stocks and I do look at those. However, I have to say that applying technical analysis on stocks is a little bit tricky. So it can be done for sure. However, you need to really look into the fundamentals as well. So at the moment, we're seeing that the market is not really loving the earnings. But again, we need to dig into that a little bit deeper. For now, what we can say is that we still remain above the 50-day EMA in a way, even with the lower opening. However, if it starts falling further below the 50-day EMA, and pretty straightforward. I'll aim for the 100, and then I'll aim for the 200. I don't have any specific levels on this one. I'm just keeping an eye on my EMAs on this one. So coming back to the Dow Jones Industrial Average, if you're looking for some lower levels, look, there is a possibility, of course, to drift lower. However, for me to get a little bit more comfortable with a larger extension to the downside, I would actually prefer to wait for a drop below the 50-day EMA first, because look, this area here has proven itself to be quite a good support zone. So 43,820. If we get a nice drop below that, then yes, great. At the same time, we would probably be placed below the 50-day EMA. And then we'll go from there. Jumping into the S&P 500, let's have a look what's happening here. Again, similar story. We're having some weakness. We're seeing a little bit of weakness, not much, to be honest. Yesterday, let me just double check. The market did close in slight positive territory. Who was the biggest gainer? Nasdaq was the biggest gainer, followed by the S&P, and then Dow. It seems, well, actually, in the relationship between those three indices, it's like always, if Dow is performing the best, then Nasdaq will be the loser. If Nasdaq is performing the best, then Dow will be the loser, and the S&P is always somewhere in between most of the time. So yeah, but again, at this point, look, I'm not excluding the upside scenario. I still like that idea. However, I will take a very careful and cautious approach on this one, and I'll say that, look, I'm going to wait until we get a nice clearance of the current all-time high, and then I'll do something about this scenario to the upside. But at this point right now, look, it's very close to the 50-day EMA. If it suddenly starts dropping and we stay below this, first of all, get rid of this downside line. We can make it as an upside line. So if we do stay below the 50-day EMA, if we drop and stay below it, then yes, of course, I'll consider a bit of a move to the downside. Now, look, At the moment, that's the game plan. Looking at the economic data, which is happening today in the U.S., let me just quickly pick that up. We do have an eventful day. In general, this week has been the U.S. job numbers week in a way. So yesterday we got the JOLTS job openings. So yep, like you can see here, it kind of dropped a little bit. Today we're having the ADP employment change. So the expectation right now is for a higher number, and this number, previously it was a little bit on the lower side. Now it seems like it wants to come out on the higher side. Again, a bit of a roller coaster ride because I think there is a lot of uncertainty. And yes, I understand that we're going to have this data for January, if I'm not mistaken. Yep, but still, I don't know if this is going to come out below. If this is going to come out below the forecast, and even below the previous, I would say, okay, now that's where we could see some worry signs. Would I say that we could get a bit of a sell-off, not a sell-off, but like a drift lower in the indices? Yeah, I think that we could see that. However, would that be like something very strong? No, because again, everybody is mostly keeping their eyes on Friday, because on Friday we get this. We get this little figure here. And this is where the pressure now is. Because look, we had the previous number at 256 coming out, yep, 256K. The current expectation is for 170K. If the number comes out, let's say, lower than the forecast, I mean, that's like really putting the market a little bit in a pickle. And most importantly, it's putting the Fed a little bit in the pickle, because look, the Fed came out recently, said that they are not going to do any more cuts. Judging from the March forecast, I mean here, March expectations, yeah, exactly the same thing. 84% right now for no cut, and by the end of this year, we are expecting 2 cuts, as I'm not mistaken. Yeah, 2 cuts for now. So, okay, look. Again, with these 2 cuts, if the Fed is really worried about inflation, and I think that the whole trade war thing could lead to some higher inflation, but if that's the case, then I mean, I don't know how you're gonna justify the cuts, and I mean, unless you're not gonna give a damn and just say, you know what, we actually we're gonna do the cuts, and this doesn't matter if the inflation is starting to pick up. But the problem is, like, if we start seeing cracks in the job market, now this is where, like I said, for the Fed, they would need to kind of go and support the economy with lower rates. Unemployment right now, let me just double check the unemployment rate on the U.S. So yeah, 4.1. I mean, has been 4.1 previously, 4.2, 4.1, around there, the same level. However, if this number suddenly jumps, let's say above 4.2, like comes out, let's say 4.3. Ooh, now that's a little bit of a problem in my opinion. So, but again, for that we will wait for Friday, and join me on Friday as well, because I'm gonna run this show, and we're gonna see how the market has kind of played out up until Friday. But let's focus on today. For now, we also have the U.S. trade balance coming out, and that one's expected to, we're expected to see a larger deficit, okay, like, I mean, I don't know. Okay, yes, you're trying to, increase your trade, you improve your trade balance. You're trying to decrease your deficit. Certainly, these tariffs, these measures are kind of kicking in, and could in a way help out. But are we going to see it in this report? I really don't know. I really don't think so, because I think we need a little bit more time. Maybe February, maybe March. We'll see. But let's say today's. Are we gonna see, like, say, let's wait and see. Let's not over speculate. I'm mainly focusing actually on the previous number, because I want to see if we're gonna come out larger than we'll get a larger deficit on than the previous time. Okay, it can be below the forecast, but if it's somewhere in between here, if the actual number comes out somewhere in between these two numbers, then it's how to say it? I don't think that it's going to be, let's say, that critical to any of the instruments here, any of the indices or anything. But it's like a good peace of mind, like to understand what's happening in general. So, jumping into Nasdaq very quickly. Nasdaq is, like I said, yesterday was the best performer, and we saw a nice push higher. I'll have to say the same thing which I said before, and I'll repeat this again for those who has not watched my sessions before in the past. Look, whenever we have Dow and the S&P kind of rallying and creating new all-time highs, the Nasdaq seems to be sometimes the laggard. However, it does eventually pick up and does eventually hit a new all-time high before, let's say, they both, not both, but three of them kind of start selling off. So if, again, this is a theory, this is something for you to kind of keep in mind, but what I've seen in the past, like I said, is that where the market, like I said, Dow, or actually doesn't have to be only Nasdaq. I've seen this one where it was the S&P and the Nasdaq were hitting all-time highs, but then Dow was the laggard, and eventually Dow picked up and created a new all-time high. So it's like they're doing this in turns, and it seems like they are going for it all together, and they're hitting all-time highs. But so, like I said, for now, I'm not seeing the Nasdaq kind of getting closer to the current all-time high. Dow did get closer. You might say what Dow didn't hit, but that came very close here. So the S&P did a new all-time high recently, and yes, Nasdaq is kind of the furthest away from all that. Anyway, by the way, let me just double check how Nvidia is doing, because again, that one is a bit of on a drop right now. So yes, DeepSeek problems. It seems like that deep S problems for Nvidia could be. However, as I've mentioned in my previous little piece and little market analysis, I don't really think that for Nvidia that could be a big issue. Maybe Microsoft, who has the OpenAI, maybe for them it could be a bit more issue. Like, by the way, MSFT, let's have a look. Yeah, I mean, this is, like I said, this is not really good. So for them, that could be a little bit of an issue. For Nvidia, because DeepSeek is kind of using Nvidia's chips. So yes, right now we're seeing some weakness, but it's because the official statement says that you cannot really export to China, and you cannot give them the best top chips available, so you have to give them like a lower grade or something like that. However, we know in reality that's not the case. I mean, we know that they're probably using the most up-to-date one. So in general, like I said, I want to see how this is going to roll further, because I don't think that Nvidia is the company that could suffer. Yes, it's suffering in the broader kind of perspective, from the broader perspective, but like in terms of, let's say, the broader market perspective, yes, we're seeing some declines. But is this company really, if it shifts, if it focuses a little bit on something else, or somehow manages to overcome these obstacles, these governmental political obstacles, I think that this could be it could travel back up. But again, for now, I mean, is there still room for some downside? For sure, especially looking at the technical picture. I mean, I'm seeing this one remaining below the 200-day EMA. So yes, it seems like it is struggling to push further north. Let's jump into the dollar index very quickly. So yes, we're seeing some declines. Okay, look, this is something that we are carefully monitoring here. The 50-day EMA which is shown as the green line. We're currently getting a little hold up around here. 107.5 zone is the one that I'm watching very, very carefully. Look, if we can get a nice clearance of that, amazing, wonderful. I will go lower. For now, I am, like I said, I'm just observing the price action, and I'm not really doing much. I do like the idea to the downside. I want to see if we can clear this area. If we can, and we can stay, if we can see the body of the daily candle staying below it, then yes, wonderful. I will go more to the downside. Let's jump into Europe very quickly, because again, apart from the US, we have European issues as well. Because look, Top of the economies, there we go. Let me just put the calendar up here. Wednesday, let's have a look at what's happening in Europe in general. So HCOB composite and services PMI final. So this week is, by the way, only like we get like, manufacturing, non-manufacturing services PMIs. So actually more like non-manufacturing. Actually, I do have to correct myself on this one. But composite and services PMIs. Look, from Europe, the composite is still above it, the forecast is for this one to go back above, above 50 into expansion territory. We are below, the previous number is below the services PMI, because the service sector is probably the bigger one here. And yeah, this is expected to be around the same level. The same story for Germany. Yes, expected to be around the same level. Apart from the composite, is expected to jump back into expansion territory. Look, what I have to say with the about the European numbers is that most of the time they come out actually as forecasts. It's very rare that that they deviate a lot from the forecast. Well, this is some might call it boring, some might call it actually stability. Anyway, UK is the same story. Composite and the services PMIs are coming out. So yes, we'll see how UK is doing today as well. And the PPIs, this is what's important here. So the PPI is expected to drop. The month-on-month one is expected to drop. However, the year-on-year is expected to start picking up again. However, look, we'll see. Producer price index, yes, it is expected to start picking back up. Let me just double check the chart. So, okay, we have been in negative territory for quite a while. So if this starts suddenly jumping into positive, and look, if the forecast is this, they're expecting a bit of a jump, I would say. And if that is the case, then this puts the ECB also in a bit of a pickle, because those guys are like on the cutting mode right now, and they will continue doing that. But let me just double check. Euro area interest rate 2.9 right now. I mean, this was the last one, and the forecast for the March interest rate decision is also for a drop, another 25 basis point. Yep, another 25 basis point drop. So, I mean, if this is going to start rising, they have to be very careful. And, they're going to, of course, they will have the February, still in, the other number in the beginning of March, if I'm not mistaken, the number that will come out. Today is the 5th. So it should be around, I think, before the interest rate decision, which is on the 6th of March. So the next PPI should come out before that. So if we see a number which is going to push it, like the actual number coming out in positive territory, or let's say 0, or just plus 0.1, they're going to be very carefully watching the next one, I think, before the interest rate decision. However, I think that they're so into the cutting mode right now that let's not care about the euro at all. So yeah, the German situation right now, the German index here, I mean, we're seeing a bit of weakness after we hit the new all-time high back in Friday. Well, back on Friday, back in January. That's so it sounds very far away, but yeah, Friday basically we hit the new all-time high. At that point, we were gaining around 10% for the year already. I mean, since the beginning of this year. And yeah, look, I mean, I don't know. I mean, for now, we're shaving off a little bit. And the question is, can we see some lower levels? Well, to be honest, at this point, what I would like to see here is a drop below the 21,000 zone first, before kind of examining lower levels. For the upside, I need to straight away, I need to see a push above the 21,800 zone. I get it. Some of you might say, but hey, what about like more short term? Well, that is kind of short term with the magnitude of everything is happening. Honestly, I think that this could all be doable. And to be honest, I'd rather be on the safe side, because again, I always allow the market to move a little bit, to shift here and there, and then kind of determine the direction. So after we saw this nice breakout here, look at this, how well we traveled here. So the same story for the upside. If we want to see some higher levels, especially that 22,000 zone, I need a clearance of that 21,800 zone. I know we could be missing out on a bit of territory here, but honestly, I'd rather be safe than sorry. That's not the technique. That's the technique that I use, because I go for these higher highs and lower lows. So let's jump into what's happening in the forex sector. Let's say, ladies and gentlemen, AUD USD. So we're having a beautiful reversal. Look at this amazing story happening here. Look, I talked about where was that piece that I did on? Was it a while ago? No, that was I think it was another place here. Basically. What I'm seeing here, of course, you can see the weakness of the US dollar here playing out. It's not that it's the stronger Australian dollar or anything like that. Well, okay, if you look at it from the commodity perspective, then gold is pushing nicely to the upside, which I'll pick up in a bit. I mean, this is fantastic. Yeah, I mean, we're seeing this one pushing higher. However, as I said before, a push above the 45-day EMA and this barrier, the 0.6330 zone, for me is required. If I can get that move, amazing, I'll go to the upside. A little bit higher. Not saying that I'm going to go crazy to the upside. No, I'm going to aim for my 100 and the 200-day EMAs first. Let's jump into USD against JPY. Look at this. So picking up Japanese yen, picking up interest. Okay, weaker dollar and the uncertainty in the market, and everybody's now kind of shifting towards the Japanese yen idea. Okay, look, I mean, this is what probably was the Bank of Japan was really hoping. I mean, I was covering this in my previous place. I was covering Japanese yen and the BOJ a lot, and basically the whole situation there was that those guys have been on the on the kind of pause of not hiking rates, because they're okay. The Japanese yen was had problems. It was devaluating, but I think that what the BOJ was hoping to see was some weakness in the economy, so that naturally people would start buying Japanese yen and kind of this way saving it from collapsing. However, let's see what's going to happen. Of course, the stronger Japanese yen is not good for the Japanese exports, and as we know, the country has enjoyed the better trade balance period for a while. Yes, the domestic consumers were a little bit suffering. However, now we're seeing this opposite. Maybe they've made their money on the trade balance, and now we can put that money into to consumers, to protect our consumers and to protect our domestic market. Anyway. Looking at the picture here, USD JPY beautifully dropping lower, and we're falling below this little short-term downside resistance line taken from the high of the highest point of July, actually. So we're dropping below that. We're falling below the 100-day EMA. So in a way, everything is kind of opening the door towards lower levels. Of course, the fact that we had an interest rate hike, the last one here in Japan in January, at the end of January last. When was that? 24th of January, and that was 2 weeks before, on a Friday. So we got the interest rate decision then. It was a hike, 25 basis point hike. This, of course, supports the Japanese yen, and in a way, this whole combo of weaker dollar and the weakness in the market is playing out very well here for the USD JPY bears. And what I said to you before, that, like I said, keep your eyes on the US dollar. If this is going to start falling below this key area of support, which I mentioned to you before, ladies and gentlemen, I think that there could be some moves to the downside. So yes, for now, just keep that in mind. So yeah, coming back to the Forex world very quickly, US dollar against the Canadian dollar. Of course, look at this. I mean, this was Monday. If you remember, tariffs came out, or should I say, the market opened, the tariffs news started coming out during the weekend. I mean, on Friday during the weekend as well. And yes, market on Friday, it just exploded here. Canadian dollar weakened. But what's interesting here, look, I talked about this before, and I said to you, look, this is what I'm keeping an eye on. I have been watching this level for quite a while now. This is the highest point of March of 2020. What happened in March of 2020? Probably all of you remember we had COVID, so the markets collapsed, yes, and oil market especially collapsed. I mean, that some futures went into negative territory, and we saw the Canadian dollar reacting accordingly, because again, we know that the Canadian economy really heavily depends on oil exports, and this is what we got. We got the devaluation of the Canadian dollar. This time around, okay, oil is not collapsing. However, the Bank of Canada was, I would say, I kind of cannot use the word collapsing. No, it wasn't collapsing. No, it was just basically on a very strong cutting rate mode, and I think that it was all due to the fact that they knew that maybe the tariffs are going to come in, and because that was already something that was announced before, and yeah, I mean, the Bank of Canada just wanted to support the economy as much as possible, and they were cutting rates strongly. Of course, it damages the local currency, because then it starts devaluing the currency in a way. However, the inflation was not picking up. So, yes, I mean, we saw, like I said, with this drop in Canadian dollar against its major counterparts, and now after this, I mean, I think that there is some stability. I think that because the pause of the tariffs came in, so I mean, I think that the newly elected government would say, oh, we just wanted to, in the U.S. I'm talking about, they would say, oh, we just wanted to scare them a little bit so that they would know who they're dealing with and stuff like that. But come on, I mean, these games here, and okay, either way, whatever they want to do, we can see that what's happening in the market right now. We're seeing a strengthening of the Canadian dollar, which is fine. I talked about this before in one of my previous videos here, which I talked about. I said, look, we have a little bit of a broadening triangle pattern, which we cleared the upper side. I mean, we reached my target of 1.4666, and then we reversed sharply back down. So this to me now looks quite, I wouldn't say quite bearish, but with potential to some more downside. So look, if we do fall below the 50-day EMA and we drop below this 1.4260 area, I will lean more towards the downside. This needs to go out of here. It's not needed here anymore. So I'm just observing this little area right here. And if we can get that drop below the 50-day EMA, my next target is the 100-day EMA, and then the 200-day EMA as well. But I'm not excluding a little bit of a rebound. However, if I'm looking at some, let's say, much higher levels, I would actually prefer to see a push somewhere back above the 1.4484-85 zone, and then we'll go from there. US dollar against the Swiss franc very quickly. So yes, a nice little coiling up moment happening here. Look, very straightforward. I have these two trend lines. This one's very technical. This one's taken from the low of the 27th of September of last year. And this upside line and the downside line is taken from the highest point of October of 2023. I need a clearance through one of these in order to consider the next short-term directional move, period. Oh, by the way, I just wanted to quickly have a look at what's happening with the dollar against the Mexican peso. Yes, again, the same similar roller coaster ride. We stabilized a little bit. Hey, it's all good. US dollar against the Chinese yuan, similar story. Popped initially and then found resistance, and then it's now drifting back down. I think that it's going to stabilize a little bit here somewhere, maybe, and we'll see a little bit of a range moment in USD CNH. Look, let's have a look at the dollar. By the way, ladies and gentlemen, whoever's watching right now, if you want me to cover an instrument or something like that, then please do message me in the chat, in the live chat, and then we can go from there. GBP USD, looking good, looking interesting here, because of course the weakening dollar here is not that the GBP suddenly became very, very strong. No, it's the weakening dollar that's helping out here the GBP USD bulls. However, as I said before, for me to start getting comfortable with some upside, I need to see a push above this 1.2523 zone in order to go to the upside. And then I'll consider a move towards the 100 and the 200-day EMA. For the downside, well, this is where the interesting bit comes in. I do understand we have a lot of territory here, but you know what? I think that for me, I will start examining some lower levels if we do drop below the 1.23, 75, 76 zone, somewhere around here, and then we'll go from there. Very quickly on Euro USD before I jump into other asset classes. Euro USD, yes, pushing nicely to the upside, 1.0354. Yeah, if we can stay somewhere above this, look, it increases the chances for a further move north. However, I have to say that because of the difficulty with the euro in the euro situation, in the European situation, because of the everybody's expecting now next tariffs to be on the eurozone. And on the European Union, well, this is where the interesting bit comes in. So yes, the Euro USD could push higher. However, for now, until we get that, we get those tariffs, we get those tariffs in place against the European Union. I mean, this is, like I said, it's just a very interesting telenovela right now happening. I mean, but hey, that's what the the people went for. So let's see, let's watch the show. For now, what I'm seeing here, like I said, I'm seeing some positivity. However, we're still below all of my EMAs on the daily chart, and that's why I'm not gonna really do anything much. I mean, I would prefer actually to wait for a push somewhere above this 1.0533 zone. I know we're like missing out a lot of territory, but even let's say when we pushed above the 50-day EMA, sometimes it does have a good, it does a good job, it acts as a good area of resistance or support, but last time it didn't, so that's why I'm not really putting too much emphasis right now on this one. If we do start respecting it, okay, fair enough. I'll change the the view maybe, and we can approach this from a different perspective. But at this point, yes, I'm just, like I said, I'm just observing the price action. Let's jump into the crypto world, ladies and gentlemen. Bitcoin Cash, Bitcoin in general. Bitcoin, look at this. Yesterday we declined. Let me just do this one a little bit. Yeah, let's drive it to 15 maybe, because yes, it's actually, you know what, 10% maybe should be fine. Yeah, 10% is fine. So we dropped it, we dropped lower. We tested the 50-day EMA. The 50-day EMA right now is providing good support. So hey, are we done with the declines? I don't know. I don't think so, because again, if the goal right now is to remain inside this box, inside this range, then yes, we have still room. Yes, we kind of came very close to testing it on Monday. As you can see here, we declined initially in the morning, and then we kind of picked up the pace and pushed back up. So we're currently floating around this 50-day EMA. If we stay above it, I'll consider a move back up. But if we start falling below that 50-day EMA, look, my next target is again the lower side here of this range, which is kind of roughly above the 90,000 zone. But again, if you're looking for some lower levels, I think that a drop below the psychological 90,000 zone could be the case, could be the better option to consider lower levels. Ethereum, again, beautiful. I would say very technical, very nice. I mean, on Monday we saw the drop, we pushed back up. Then yesterday we remained above this upside line taken from the low of the. Let me just adjust this very quickly. The lowest point of August of 2024. So we remained above that. So we're now kind of bouncing around in this area. Are we getting very comfortable with anything here? No, absolutely not, because this is honestly, it might start coiling up, and this is what I mentioned before. It might start coiling up here, and look, we need the clearance. We need a good clearance of this of one of these trend lines in order to consider the next short-term directional move. At this point, look, at this point, I'm just gonna approach it from that perspective. Very quickly on Ripple, it experienced a strong decline, dropped briefly below the psychological 2 zone, and then pushed straight away back up. So what I can say here is that we also remain above the 50-day EMA, but in general, this idea worked out nicely for me, this arrow here. And I talked about it and I pointed it out here back on the 24th of January when we were still here above this upside line, and there we go. We got that breakout. I said to you, I warned you from the technical perspective, it looks amazing for the downside. Only if we do break that upside line. We got that. We got that. Amazing, fantastic. I'm very happy about this. Again, don't get me wrong. Not all ideas kind of work out perfectly. It's just that I try to approach this from a more of a careful and casual perspective, because again, I have seen scenarios where it seems like everything's going to work out, but again, it just teases you a little bit and then goes in the opposite direction. So been there, done that. So that's why we're approaching this very carefully, and that's why I'll never say that this is where you should buy or sell, because this is just like I don't have a crystal ball. That's the thing. I'm an analyst. I analyze the market and I try to make sense of what's happening right now. So, and this is, I hope you approach this from that perspective too. Look, from cryptos, let's finally jump into commodities. And of course, an animal in the room. Look at this gold. I mean, this is just pushing fantastically to the upside. I mean, 2,900, here we come. Most likely. I'm not going to say for sure, but I think everybody's talking a lot about the psychological 3,000 zone. I think everybody's just thirsty for that. I mean, everybody's just, there's no reasoning, there's no logic behind it, but just let's push it towards the 3,000 just to tick the box in that, and say that we're happy. So for me at this moment, it seems like that. So this is how it looks like that. And we cleared the previous all-time high, which is back here in October of 2024. We cleared it at the end of January. And yes, we pushed above that 2,790 zone. And look at where we are right now. We're almost $100 on top. So can this go any further? Look, it is a one-way traffic right now. I mean, it's a train that I don't know what can stop right now at this point. Maybe higher interest rates, or maybe the wording that most of the central banks are gonna hold off from cutting rates. Maybe that could be the case. Oh, hey, Jindao Tai. Hey, good morning. Happy to see you here. Yes, happy to see you again. So, Jindao Tai, long-term fella here, companion in the forex world, ladies and gentlemen. So, thank you very much. Honestly, comments like these do kind of make me very happy, and thank you very much for that. Jindao, I hope you're having a fantastic day. I hope you're having a fantastic start of Wednesday. Jindao, while I have you here, tell me, and because I don't know if you're going to tune in on Friday or not, but while I have you here, NFP lower or higher than the forecast? Because let me just remind everybody again, the number here, where is that? Non-farm payrolls, yes, 170K. So we're already on the lower side, lower than the forecast, or higher. Tell me, because I really value your opinion, and hopefully, hopefully the people here will also enjoy. Gilvinas, hey, in the end, could you also review coffee, C futures, and Henry Hub natural gas futures just briefly? Thanks. Look, commodity. Where is that? What I have here, I have the natural gas here, and the coffee. I'll pick up on those. Let me finish off with gold. So disclaimer applies, but I think Jindao, yes, you know the game is yes, disclaimer applies. So you think lower? Yes, honestly, that's what it's like when you meet people who have similar opinions to yours, and you're thinking, wow, that person is really, really smart, because they have similar opinions to yours. And yes, yes, of course. Look, with ADP, Jindao, with ADP, again, I think that one could be on the higher side. I don't know, because I don't like, I stopped looking at the correlation really between them. It's, yes, it's nice to have. I like when everything is like on the lower side. You know, JOLTS, ADP, and NFP. You know, at the same week, the same time. That's perfect. You know, that's amazing. But still, I always tell everybody, just be careful with the correlation. Sometimes it doesn't happen. So, but yeah, it's, of course, it's a good tool to monitor, to keep an eye on. I'm talking about the ADPs. Yes, exactly what you're saying right now, Jindao. Yes, exactly. There's no real correlation though. But yeah, Joel says right. Yes, exactly. So yeah, we'll see. You know, it's we'll see how it goes. You know, with the NFPs. Like, but honestly, Jindao, thank you very much for tuning in. I really appreciate that. In general, everybody who's tuning in, who has tuned in, and honestly, thank you very much. Gilles, I'm no, you're not hijacking. Jindao, you're not hijacking. It's amazing. This is the thing that I always ask people to do. You know, like, honestly, have the interaction. Let's have the interaction. Let's talk. You know, let's because I love debates, and I like to see opinions, maybe, let's say, who are like not like my opinions, and because I learn, you learn, we all learn, you know. So anyway, but Jindao, thank you very much for tuning in. I really appreciate that. So Gilles, I'll get to your question in a bit, just before ending, of course. No, I didn't forget about that. So look, with gold, what I want to say here. Now, the question is, because whenever we hit new all-time highs, it's always the question, where next? You know, where is that area of resistance? Yeah, you know, this is Jindao. You know, like how it sounds like now, right now. It seems like you know, I've paid you to and asked you to do all that stuff. It's like, but no, thank you. Please follow Jindao's recommendation. I think that, yes, that would really help me out. So yes, thank you very much, Jindao. Thank you. Oh yeah. They caught us, you know. Yeah. Anyway, so yes, right. So what I wanted to say, whenever we are in this position, when we're hitting new all-time highs, I mean, look, I tend to refer to my beloved Fibonacci extension tool, and basically try to find some sort of reasoning there. But because this is very subjective, in a way, the way you're going to draw it, why we're drawing it this way, why we're not, for example, drawing it maybe from somewhere around here. So, you know, maybe now it makes a little bit more sense. This 2,880 zone, which is at the 78.6, and this Fibonacci extension is drawn from the low of the 25th of July to the highest point of October, and then to the low of the 14th of November. So the lowest point of November. So if we're drawing it this way, then yes, the 2,880 zone becomes quite an interesting level to watch. You know, it becomes quite an interesting area of resistance. However, if we're doing it this way, but again, it's really difficult. Probably for this, I would refer maybe to a weekly or maybe even a monthly chart. So maybe this way it could be a little bit more, you know, clear. So that's what I'm talking about. So 2,954 is this way, if we draw it this way, or actually, you know what, let's put it this way there. So, where's that? 3,127. That's a good target according to this Fibonacci extension. That's why, like I said, that's where I see the problem with the Fibonacci extension. I do like this tool, but you know, if we draw it this way, I mean, we can draw it from the negative, the candle that we had to the downside here, a little bit of a negative candle here on the monthly chart. Then this way it becomes the 2,993 area is the one that everybody's watching. Now, from all the Fibonacci's that I just have drawn, honestly, I think this one to me could make the most sense. Why? Because, look, the target is around the 3,000 zone, the psychological one. It's slightly below. So when everybody is anticipating the same thing, everybody's anticipating the 3,000 mark. I mean, this is where the market we could see it coming very close to that. Everybody has their price, you know, their take profits around the 3,000 mark. It doesn't reach that. and then just reverses back down, and just, and then everybody's very frustrated, and everybody started buying in again, and then it doesn't, it just reverses back down. So that's what I'm saying. Just always keep in mind that it's not the exact level, it's the area around that level. So coming back to this, let's adjust this very quickly. Right now, like I said, I'll continue targeting the upside. 2,900 is my next target. I don't know if we're going to reach that or not, but at this point, whenever we are hitting new all-time highs, this seems the most logical. Very quickly on coffee. So, Zelenis, coffee. That's actually, I love this. I love this this instrument. I love this one. And look, we do have issues, of course, with coffee, and the coffee futures have been rising. I mean, of course, tariffs are not, not helping here as well, and we're seeing this acceleration. And in general, what's also not helping are the deforestation in Brazil, in the South America in general. That's also something, that is kind of because it's spreading disease. Trees get diseases, and honestly, like, wildlife starts maybe shifting from the areas where you cut trees, and they go into those other areas where maybe coffee plantations are. So it's a little bit of, like I said, it's all connected. If you think that you're cutting a tree somewhere far away, no, because it's gonna eventually affect the other places as well. So we're having issues with coffee in general. So look, we have an increase in demand. Yes, coffee producers are enjoying profits in a way, and coffee roasters are enjoying the profits as well. And we, people, we kind of we had a huge shift towards coffee lately, and I think that this is the the drink that everybody's like very crazy about. Oh, no, sorry, not everybody, but a lot of people who are crazy about, and me myself as well. I love coffee, and I can see why. I mean, just how this is, why this is rallying. So, do I think that this is the end? Look, at some point it will have to reverse back down. The question is, I think, given that this will be very headline driven, we need to wait for the headline. From the technical perspective, looking at this daily chart, I'll say that there is a possibility for a reversal, because again, looking at our RSI, the MACD is kind of eventually at some point it will reverse back down. Do I say that it's going to be now? Look, as much as I would like to see this one maybe going back down here, I cannot. I don't see a clear signal yet. So yes, this is declining, but this is today's candle. I mean, this is like sorry, that's Tuesday's candle, not today's candle. So Tuesday's candle. Yes, it was a doji, and according to all the TA rules, such patterns tend to signal a reversal. If we want to stick to that idea, yes, you can, but then be careful. Let's assume you are, taking this as a doji, and you're thinking that, okay, great, it's a reversal signal. Probably very straightforward. Your stop loss is somewhere around here, the 389 zone. Then, but because if we're clear the current all-time high, I mean, it will go higher again. So that's the thing. So that's why we need to be very careful with this. I don't really look. I don't recommend in general doing anything here, because again, for me right now, I'm not seeing the reversal signals, the strong reversals. I'm seeing part of those signals, but it's still not ticking all my boxes. And if it's not ticking all my boxes, I'm not touching this one. So yeah, that's in terms of coffee. And I need something, let's say a bigger shift, like something like this, like we had like reversals here, and then yes. What did you say? Natural gas. Natural gas is on, I want to say on fire, but it's not really on fire. No, at the moment, natural gas is stuck. Purely from the technical perspective, it's stuck in between my EMAs here, between the 50 and the 200, somewhere around the 100-day EMA, oscillating around that 100-day EMA. I'm not touching that. I'm just observing the price action, because again, I need some sort of clarity. So if I do see a push above the current highest point of February, around the 3.40 zone, and yes, I will slowly shift to the upside. The only problem with the upside that I have is this little short-term tentative downside line. So in a way, this is something to kind of keep in mind and be careful about. again, that's purely from the technical perspective. For the downside, from the technical perspective, again, similar story. I would prefer to wait for a drop at least somewhere below the lowest point of January, and then consider a move lower. Basically, that would put the price below the psychological 3 level. Not only the January's low, but the psychological 3 level. Yes, we have the 200-day in a way in there. However, I've seen it in the past that it doesn't always play, as a good area of support and resistance. So that's why I'm just gonna, for this one, I'm sticking more to levels rather than EMAs. So you see, this is, like I said, this is where the difference comes in. Gilles, yes, no problem. Look, I hope it helped. I mean, I'm not saying that, I'm not, as I keep on saying, I don't have the crystal ball, unfortunately. I only have my, my leather head here on the top, and, that's what I'm trying to use here. Yeah, look, I mean, for now, that's the game plan. I think it could be quite logical, but time will tell, of course. But like at this point, honestly, I like natural gas. I do like looking at it, and honestly, it does present itself with a lot of opportunities. For example, if it does clear that 3.40 zone and we start, we clear this downside line as well, then yes, hey, 3.71 zone is the next one to watch. And very quickly, I want to wrap it up here. And before, I think I already went a little bit over one hour time slot here. Look. That WTI oil, I mean, we are in a bit of a pickle here, I would say. So we are still stuck slightly above the opening price of this year, and we are basically, this level here is also near the opening price of last year. So we're kind of oscillating around that area right now. Yesterday we dropped briefly, but then we pushed back up. Today we're showing some weakness again. Look, if we do drop and stay below it, we see the body of the daily candle staying below this area, I'm going to consider a little bit of a move to the downside. So, ladies and gentlemen, and that is a wrap. Thank you very much. Thank you very much, everybody who watched this. Thank you very much, Gilles, Christiana, and Jindal, everybody who was commenting here today. Thank you sincerely. And ladies and gentlemen who are watching this as a live session, I bow down to you. And of course, the people who will be watching this as a recorded session later on, thank you very much for that as well. Thank you for your time. Look, like I said, I do welcome interaction. I do welcome people commenting, and if you want to let me know what you want, would you like me to cover in the next session? Honestly, feel free, and I will try. If I do have the instrument for that, I will cover it, and if I do have the knowledge for that as well, I will cover that as well. So, thank you very much, ladies and gentlemen. Join me on Friday, the same time. You'll see the upcoming event on our YouTube channel, and yes, of course, do the usual stuff like subscribe, like, share, and then whatever they say in there as well. But yeah, do like and subscribe and stuff like that. So, and also, yes, follow us on TradingView. I think you can get a lot of good stuff in there as well. So thank you very much, and I'll see you on Friday. Bye bye.